So what should an investor focus on when seeing that streak of red? Our next guest says commodities is the play right now, and that the investment strategy at the time should be stay the course. Let's go to Lesley Marks, Chief Investment Officer, Mackenzie Investments. Thanks for joining us today.
Great to be here, Marella.
So oil surging again today. Could we get to $100 a barrel, you think, if the war carries on?
Well, I think there's a lot of variables that would have to sort of come into play to see that $100 number. And I don't want to speculate. I mean, it's really hard for one to, have an opinion on where we see this war going. We really don't know the length of this conflict. We don't know the different twists and turns it could take. So I think at this point, it would be premature to call a number for oil. But I think directionally, that, when we look at what's happening in the region, that oil should be trading higher today than it did, say, 1 or 2 months ago. So that makes sense. And that's part of our thesis around commodities and the point that commodities should represent an important part of an investor's portfolio.
Okay, let's look a little more widely at stocks in general, which did recover yesterday by the end of the day. But today we see, of course, that big trend down. How resilient could stocks be, you think, if the conflict drags on?
So, I mean, you talk about stocks in general terms, and, not all markets are created equal. Obviously, here in Canada, we have a much more commodity-oriented market. And so when you look at what's pulling down the market today, it's primarily the materials sector, which is off over 7%. And that compares to the market being only off about 2%. So Canadian stocks will probably chart a different path than global equities, which do tend to be more global economic growth sensitive, or what we expect for earnings in broader economies, whereas in Canada, commodity expectations are definitely a strong determinant for earnings for the TSX.
So what would you say would be your biggest concern about what's going on in the Middle East right now? Is it inflation? Is it another sort of twist in supply chain?
Well, I think that the market is concerned about the potential for inflation. And that's why today the market is selling off, and I would have expected to see that yesterday. I think most of us were pretty surprised to see the market action that we saw yesterday when U.S. markets opened. I think today what investors are digesting is this idea that if this conflict goes on for weeks or months, that there could be an inflationary impact. And that's going to make it a lot more difficult for central bankers to cut interest rates, particularly the Federal Reserve, which is part of the expectation for 2026. Now, you asked about what I'm worried about. I mean, I think for me, it comes back to your first question, which is this level of uncertainty. The fact that we don't really have a good roadmap to say, this is a conflict that's going to last X number of days, or this is what's going to happen, or this is how long the Strait of Hormuz will be closed for and oil will not flow freely. I think there's just a lot of uncertainty, but I'm actually less concerned about the inflationary problems, because I do think that the market will look through that and see that as temporary. And if the economy can withstand or needs lower interest rates, we will get that from the Federal Reserve.
Okay, so let's talk a little bit more about investment strategy at this time. You talked about commodities. Can you expand a little bit more on that and where you think investors should focus?
Yeah, so I think it's, not all commodities are created equal. I mean, of course, we have more financially oriented commodities like gold. And then we have what I would call more cyclical commodities like oil, natural gas, copper, critical minerals. So those things that are, important for economic growth. We see the demand for commodities coming very much from a lot of the industrial construction that we're seeing for data centers. There's also a strategic component. So there's just a lot of things happening here that are creating a nice tailwind for commodities. But the one factor that is common across the commodity space is that over the last decade, there really was a general underinvestment in commodities and in new projects. And so what we have is a cap on supply at the same time that demand is rising. And that's a fundamental that's impacting across all of the real assets or commodities-oriented spaces. Of course, as I mentioned, very difficult to handicap the geopolitical risks that are top of mind right now. So I take it back to the fundamentals.
Okay, so you also mentioned sort of AI, and we know a lot of investors were shying away from the direct AI trade, the Mag 7, that kind of thing. Are you still investing around AI in energy, for example?
Well, I think that when you think about AI, where the market is really shifting, and we think this is actually the right strategy, is towards the AI beneficiaries. Because what people are realizing over the last couple of months is that the companies that are investing and that were so, heavily oriented towards AI, and you talked about the Mag 7 companies, that this is really consuming a lot of their cash flow. And that had been, free cash flow had been the reason to, close your eyes and own these names blindly. Well, that's no longer the case as they have a use for their free cash flow, and free cash flow has come down, and earnings growth is starting to not necessarily come down, but other companies are actually catching up to the earnings growth outlook. And so what that's showing is that there are more attractive names out there with better growth, better free cash flow growth than the Mag 7. And that's why you're seeing the big win come from the S&P equal weighted when compared to the S&P. So it's basically flat on the year, but you've got the equal weighted, which is up 6 or 7%. And that's really because of the shift or rotation away from those AI companies that were really the big hyperscalers spending a lot of their cash flow towards the companies that will benefit from higher margins, from better productivity, from using AI.
All right. It really is just something that continues to go at warp speed. Lesley Marks, Chief Investment Officer, Mackenzie Investments. Thanks for your time.